In this webinar today, I will share with you the alpha wave trader method, what the method is all about, and the most exciting part of the webinar, as always, answering your questions. So please prepare the instrument and the time frame you would like me to analyze for you, and I look forward to answering your questions. Please make sure that you enter the name of the instrument and the time frame attached to it. Very important. So let's start, shall we? Please spend time reading US government required disclaimer, as it is extremely important to recognize the risks involved in trading. So what makes alpha wave trader method so different? Alpha wave trader method based on pure price action only, no indicators of any kind. Every single decision made before trend entry requires only pure price and Fibonacci levels. For example, this is a short trade I had taken today on oil. This is a short that, after reaching reversal zone, staged extremely powerful reversal. This is a formula that plays on any instrument and any time frame. Know where to enter and know where to take profits of the table. And Fibonacci tells you everything you need to know. And Fibonacci is what confirms these very critical and very powerful levels for profit taking. The same formula applies to stocks, forex, options, anything that has price. Simply enter markets using market structure and exit markets using Fibonacci levels. So why do we do this? Why I and my team not using any indicators whatsoever? Because indicators, every single indicator that exists in the market is delayed. Every single indicator that's ever been developed shows what price did after the fact. No indicator on the planet will show you where trend reversal, trend exhaustion, trend inception, and profit taking levels will be. Price tells you all these levels far in advance. For example, this is oil hourly chart. The bullish rally on oil started as of June 2nd. As of June 2nd, buyers picked up the steam and found extremely powerful resistance. This is the most critical level in the market structure, which is the end of the minor trend. This is where oil collapsed from and struggled for 3 days, finally blasting through and finding what when it came to reversal level? Finding extremely strong resistance, reminding you, if trader acquires a position at reversal area, it is extremely aggressive trading. As first, oil staged only corrections, giving extremely slow market conditions, and today finally ultimate reversal we've been waiting for since yesterday. And this is where I closed the room, this is where we took the short, and this is where the short had ended. And as you could see, reversal area on hourly to the upside is the same exact formula as support area on oil 13 range, confirming that exact same price moves in exact same way on any instrument and any time frame. And that's the reason why I stopped using indicators years ago. And that's the reason why I developed my own method that identifies where the price stages reversals, where the price stages correction. It's all in front of you. This is the alphabet of the market. This is what shows where price is weak, where price is corrective. This is what showed our students this morning in Alpha Wave Traders Club, where to walk away from corrections. As S&P this morning was absolutely unbearable. If you came to the markets this morning, S&P was spelling out to all of our students, as we believe in trading only 3 hours a day. This is where price had ended at the close of the trading room. When we came to the markets, we said, adios S&P traders, because unless you want to be stuck in worthless corrections, there is no meaning in this price. And what did I say? I said, expect very powerful rally towards the market close. Price spelled out that decision point 1, the end of the minor trend shall be respected. And this is where ultimate battle went on. And this is where buyers finally picked up the steam after a very, very brutal fight that no indicator on the planet will show you. That was very clearly spelled out yesterday at the market close. Guess what the price had done yesterday? S&P had staged a very powerful reversal, because that's where the reversal area had been reached. And I will show that to you in just a second. And that's how price moves. And you don't need no indicator ever to see how pure and clear price is. And that's all that matters. The inception of the trend and continuation of the trend. And price moves exact same way on any instrument and any time frame. And that's why I love answering your questions, because as you will see, it's the exact same formula that applies to any instrument and any time frame. So let's move on, shall we? I see one question posted so far. A question about Russell 15 minutes. I actually developed my method on Russell, but currently due to changes on the ICE exchange, volume non-existent, therefore you are extremely limited with what you can trade on Russell. So here's an example. Here is moving averages crossovers. This is what I used as one of my very last indicators. Indicator I was devoted to for a long time. I couldn't understand why indicator did not work all the time. Because moving average is also lagging. Moving average will never show you where the end of the minor trend will be far in advance. Moving average will never show you when market is in consolidation. And because the entries look so perfect in backtesting, are very brutal in live markets if market is ranging. By the time you're entering long, price reverses short and vice versa. So moving averages or crossovers are very powerful in trending markets and very dangerous in market consolidation. And this is example what S&P had done yesterday. This is what S&P spelled out to us since June 2nd. The end of the minor trend will be at 93.75. I don't know how long it will take for price to get there, but I know that this is the most important level in the market structure. And I know to respect it dearly, because that's exactly where S&P staged very powerful bounce from the short trend. This is the most important level. And here is level 2. Price continued, tried to blast through this level. Worthless corrections, unbearable if you don't respect that price in reversal zone. If you do, you do not babysit the fluff. And as I spelled out yesterday, S&P ain't touchable until it will stage powerful reversal, which it finally had done. But pay attention to what happened to those traders who acquired long position at this level. Inception of the trend was June 2nd. Buying here is not a good idea. All of these levels are Alpha Wave Trader proprietary Fibonacci levels that I developed after studying price action for years, and I will post you that link in just a second so you can study and read what the method is based on, and you can review all the latest blog posts with multiple trade examples. So that's all there is in a nutshell. Every single level is Fibonacci level that I developed after years of studying pure price action. And I continue working on other strategies. Currently, I'm working on strategy number 13. In the course, we're teaching 2 strategies that apply to any instrument in any time frame. Currently in the course, we have Forex traders, stock traders, option traders. But in the group setting, we teach everything on S&P and oil. In private mentoring, I teach on the instrument of your choice. And this is an example of one of the charts that I saw when I logged in into one of the computers of my student. He's been trading for 20 years and he's still at break-even point, which frankly is pretty good considering the number of indicators you can see on this chart. So I said, do you know what the price is doing? He said, no, I spent 20 years, hundreds of thousands of dollars on software and indicators, and I still have no idea about the market. How can you? Where did the poor price go? Poor price is completely cluttered. I can't even count how many indicators are here on the chart, when all you need is pure price. To see the power, to see the weakness, to see the reversal. And this is what I apply before I apply my Fibonacci levels. This is a very, very important 4 rules that identify trend inception. Once you learn where trend inception is, you can trade any instrument and any time frame. That's what it comes down to. Nothing less, nothing more. S&P monthly spelled out since 900 number where the phenomenal rally will be. Pay attention to what did I know since 2009? That it would be phenomenal rally? That still did not reach the exhaustion level. S&P is heading to 2135. But this rally is getting pretty tired. That's why day trading market conditions had been frankly unbearable. Very, very slow because this rally is extremely exhausted. And if you respect that fact, you understand that day trading conditions will become even more challenging if you don't know the rules. Which means more corrections, slower markets, more knowledge required to walk away from computer, because this bullish rally is not far off from complete reversal. Volatility in the market at historical low compared to 3 years ago. Oil ATR dropped by 60%. We have the slowest 6 months in the history of oil in years. And if you pay attention to weekly and monthly, you would simply respect that. And I'll recap the structure in a little while. And that's the price. So if you pay attention to price, you trade with clarity. And what we're learning in the current market conditions when it comes to day trading especially, it's essential to walk away when market gives you corrections. So this is when I closed trading room this morning. I will show you a screenshot. As you could see very clearly, in case you are not trading S&P, this is what I was posted on the blog. And this is picture perfect reminder. Knowledge is the key. When you see this fluff and you come to the markets, what is a prudent thing to do? Respect correction. Walk away from the screen. Take a day off. A lot more of this is coming because weekly and monthly charts getting extremely tired. We will get drastically lower volatility and more corrective structure where knowledge will be tested. And if you know what price is telling you, you simply say, sorry, crappy day is coming, I'm gonna walk away. And that really is essential to respect when price goes into very slow corrective mode. So as you could see on the performance link, last month I had taken the lowest number of trades in 3 years. On oil we had only 2 negative trades in the trading room in entire months, because oil had been staging very volatile moves as of 6 a.m. EST, and when you come to the trading pit hours, oil is beyond slow, reminding you how critical it is to respect market structure and how important it is to respect that every single level of support and resistance formed by Fibonacci. Fibonacci is a mysterious concept that surrounds us in absolutely everything. Everywhere you look, there are Fibonacci levels. It's a concept that was brought to the fore by Italian mathematician in the early 13th century, Leonardo Pisano, who was called by his friends as Fibonacci. His work and findings detailed a number sequence which was found to impact our everyday lives. And if you know that sequence, you can easily trade Apple monthly, Forex weekly, oil, whatever has a price, has Fibonacci levels that identify profit taken, trend reversals, trend inception, and trend corrections. And this is the magic formula. And this is all you need to respect when it comes to the market structure. Very important golden ratio is created by this formula. I only trade Fibonacci numbers in the trading room. Due to the current very slow market conditions, very shortly we will be adding much larger time frames, because day trading really had been very slow. And if you respect that, you would see what oil is telling you. All the levels on oil spelled out since 2010. When oil came in 2010 to reversal down, it had extremely volatile and very powerful collapse. Those who trade oil remember how phenomenal day trading was. Each and every trade was not more than 20 seconds in very powerful profit. Lately, our average time in day trading, 1.5 to 2 hours. And that was our trade today. This short trade was 2 hours long. Unbelievable. The test of patience and discipline that's required in current market conditions. And that's where ultimate test comes into play. So, let's take a look what oil had done. From reversal zone, oil collapsed and found the end of the minor trend. If you remember, it's exactly same level that S&P respected on hourly. This is the most important level in the market structure because we always have minor trend. We not always have major trend. Buyers picked up this steam and found reversal where? At reversal zone. So if you're an options trader, you would know extremely clearly. Time to trail very carefully, and time to remember what happens if you acquire a position in a reversal zone. Short collapse, found support at the end of the minor trend, and very minor trend corrections continued. And this is where oil monthly is crawling to. This is where it's gonna get exciting. This is where expect while oil will finally crawl up to reversal zone to pick up with volatility. That's all there is. Pure price for entry and Fibonacci for exits. All of these levels to the upside identified since 2012. Make sense? The long trade to the upside was identified in 2010. And this bullish rally, all the levels drawn since 2012. If you know Fibonacci levels, you can trade monthly, weekly, hourly. What's appropriate to you, your psychological comfort and your account size is what remains the key. And Fibonacci levels identify everything far in advance. No indicator on the planet would ever tell you that. And that's the basic rules we teach in the course. It's all right here in front of you. Respect for rules, acquire trend inception, wave 1. If wave 1 is weak, if wave 1 is corrective, walk away. That was the case on S&P today. Wave 2 is corrective, counter trend structure. If you see counter trend structure and you take a trade, you have to recognize that you're entering against the trend. Second opportunity to buy at the inception of wave 3. If you're trading wave 4, it's a counter trend structure. Bad idea. Our students learn. Powerful inception, enjoy the rally. Enjoy continuation, stay out of wave 3. That's it. That's all we teach in the course. Formula that applies to any instrument in any time frame. And to see, we have Forex traders that trade 15-minute, 1-hour, daily, weekly, ETF traders using exact same formula time and time again as price continues doing the same exact dance without any interruptions of any kind. So, the test of patience and discipline will become even more challenging. As again, for day trading purposes, this beautiful rally is getting very tired and will remind you, this is very powerful major trend formation that had been formed. Here the trader got very lucky acquiring a little bit of wave 5. But it's not a prudent trading. This is exactly what played out yesterday on S&P hourly. If you remember, price struggled at the end of wave 5 and at the end of wave 3 and finally blasted just tiny bit more, giving trader bare opportunity. That's what happens if trader buying at reversal zone. This is how important these levels are. And if you play by the rules, you do not gamble. You do not acquire trend position at these levels. You monitor for reversals. And that remains the key. And that's what S&P had done yesterday after trading room hours, giving very powerful opportunities to the downside that make a whole lot more sense and that are a lot less painful trading. So, the crawl is on. S&P continues. Do not be fooled. 1954, monitor for shorts. And if you know the rules, you take the advantage of the market structure. So here it is, ranging markets. Very, very important. Simply tell you, respect slower corrective moves. It is that simple. When market is not setting up for spectacular volatile rally, you can't be going for 10-point runs. If market is giving you 1.5 10-point range in ranging markets, respect what price is telling you. And if market stages very powerful and very volatile formations, take advantage of it. Why not? Simple. Knowledge is power, but discipline and rules will forever remain the key. So here's an example of trending markets that our amazing graduate Kathy trades. The beast of the indices, DAX. If you know anything about DAX, you would know that DAX is a pit bull of the indices, the most expensive future outside of the bonds, with drastically higher volatility than oil will ever be. It's a German beast that trends 90% of the time. So if you know the rules, why not take the advantage of the volatility and write very powerful structure? Cassie still does that. DAX remains very volatile, which is not the case with oil. Despite volatility, DAX still respects very powerful Fibonacci levels. So if you know where these levels are, you know what not to enter into, and you know where to take profits off the table. And all there is very important 4 rules that you have to obey as a trader. Here's an example of the most important wave in the market structure, and here's a picture perfect example what happens if you acquire position at the end of the wave 3. Bad idea, wave 2, stay out. Enjoy the rally, stay out at the end of 3. Know where not to enter into. Short, marvelous, powerful, and here's a danger. Oh no, support had been found. How predictable. Marvelous, very, very classic, and very, very clean rally on Euros 3 minutes. Few more minutes, guys, and I look forward to answering your questions. I love the interactive environment. I love the power of pure price. I never get tired of it, trust me. After we're done with the webinar, I'll be working on my strategy because it just never, ever get old. That this magnificent puzzle continue becoming easier and easier to see each and every day. And here it is, beauty. Spectacular wave 1, stay out of corrective structure, marvelous wave 3, and this is what happens if you're acquiring position at the end of wave 3. Chappy floppy oil, no wonder. Low liquidity instrument that stages very, very fluffy formations. Google doesn't get any cleaner. 1 minute chart, as clean and as marvelous as it gets. 5 wave structure, major trend. This trader got a little bit lucky. Wow, I see that the charts are stuck a bit. Thank you, Pip. Hold on 1 second, please. So this is the 3-wave structure that reminds you how important it is to respect the end of wave 3 and what not to enter into, correct? It is the same formula that applies to the short structure. Here's the end of wave 3. Know what not to enter into. This is what requires evolution of the trader to come to this conclusion. And this is what we're witnessing currently in day trading conditions. The most important thing, know what not to enter into and know when market in correction because of the larger time frames and overextended rally, it will be ultimate test. So was ultimate corrective fluff, because this was the end of the minor trend where sellers had finally found buyers on S&P, being one of the most fascinating days of all. And here's an example Euro 3-minute chart. Marvelous, powerful, very clean rally that reminded you respect where wave 3 ends. Because trend does not work like that. It kills me when I hear trader come and say, "Hoo-hoo, trend is strong, I'm gonna catch the rally," and then, what happened? Oh no, it's a reversal zone. How did that happen? Simple. Know where trend exhaustion levels are, and your trading will go to drastically different level. And what I was referring to when we got kicked out from Omnovia is to what Kathy trades. So here's an example of DAX, the beast. What do you see DAX had done? If the trader who thinks he's taking powerful rally acquired the position into reversal zone, what has happened? The collapse can be phenomenal. Spectacular rally? Ouch. Know these levels. Know what not to enter into. Reversal zones are to be adored, worshipped, and respected. This is the level where your long trade acquired at this level, or outside of decision point 1, or outside of decision point 2, worst case scenario that gives you enough space till reversal zone. Buying here is not serious trading. This becomes gambling. Knowledgeable trader looks only for shorts, no longs here, because trend gets very tired. And the good thing, when trend stages, reversal, not correction. And that's exactly what oil had done, correct? Yesterday, worthless corrections, completely worthless corrections, and finally, powerful reversal. The long we took today in the room was up till here. And I said, listen peeps, you have to respect the fact that this is all that oil gives me. Because frankly, the fact that we are in reversal zone, buying at these levels is very aggressive. But that's all there was long till here. I said my bias is totally short. So any long trade in this structure is very aggressive. Our students simply patiently wait for the short structure and take advantage of that. And that was the short trade we took that went on forever and ever and ever. 2 hour short on oil? Are you kidding me? Very challenging. Respect the change when market gives you one. Yes, I'm recording and I can see that Adrian is recording. The recording will be posted on my blog and YouTube channel. Looking for very important rules before I ever sell. There is no speculative selling. There is no speculative buying. Everything rule-based. Very important 4 rules is exactly the emphasis in the course. Price is not complicated. All you have to do is play by the rules. So here's a few more examples and I look forward to answering your questions. Google 1 minute, classic, clean, marvelous. Here's a trader got a little lucky, taking a trade at the end of wave 3. But beautiful wave 1, beautiful wave 3. This is major trend structure. This is what price does each and every time. So this is all we teach. 2 key concepts, 4 rules for entry, most essential rule for profit, Fibonacci technique, how to apply levels properly. So I would get the phone calls and the person would say, I used Fibonacci levels, doesn't mean anything to me. The way I use Fibonacci levels I developed on my own. I've never seen anyone use it this way. So nothing else frankly matters. I wish I could learn something somewhere. No, that did not happen. I had to work many years of studying pure price. I still do, because I can't get enough of this magnificent puzzle. And this involves no software, no indicators whatsoever. Fibonacci tool is free on any platform. You just need the rules, how to apply them properly. And if you do, you know how to define wave formation, how to define wave termination, and what creates Fibonacci price waves. Therefore, you have high probability entries, high probability targets, and you know where areas of inherent danger are. So in Alpha Wave Trader community, we have 3 different areas. I will post the invitation to the trading room shortly, where you can come and visit us tomorrow and Thursday, where I demonstrate the method. Again, in the trading room I show the method on day trading, correct? Where quite a few of our students currently trading much larger time frames, because the volatility in the markets doesn't allow short-term trading. We take much larger time frame as trades. So that's a room where I demonstrate day trading only. Education room is entirely separate. We take education very seriously. It is live theory discussion, live education with precise 4 rules 3 times a week after trading room hours. Once you master the theory, we meet together in Alpha Wave Traders Club every morning pre-market. So in the trading room I demonstrate the method on oil and S&P. The reason why I picked oil and S&P after the vote by our students almost 2 years ago is because they're drastically opposite instruments. Those of us who love S&P love exponential potential, and volatility on S&P had been drastically higher than volatility on oil. Billions of dollars traded on S&P, only hundreds of thousands of dollars traded on oil as future. Therefore, that's the reason I am personally attracted to S&P, because if beginner trader comes to the markets and you start today with 1-2 lots, you become like our beginner student Janice, who's never taken any other course and already doubled her account. Janice never owned one indicator in her life, which is an incredible role model for other traders. What can happen if you don't have any baggage? And recently Janice added oil, which is marvelous to hear that story. So, if you decide to learn the price, you have online access to the manuals, live trading education, and access to the trading room. So that's all there is. This is the levels we trade off. Fibonacci levels is what matters. I'm ready for your questions, ladies and gentlemen. This is all there is. Pure price for entry and Fibonacci for exits. So look forward to your questions, please. Look forward to your questions. I will show you the websites in just a second. It is all posted on the website where you can click and you can review the information. So while you guys thinking about the questions, I will just start pulling up various instruments. What about stocks? If there is no questions about futures, Forex, any other time frame, please. So while you're still thinking, I will pull up something that's very exciting had played out on Apple. That was just absolutely fascinating. The split that played out on Apple, correct? So let's take a look on what happened on Apple monthly and where you had an opportunity to buy Apple due to the split. So this is actually extremely fascinating because you could see very, very clearly how much price does not care about anything. This was a split on Apple. It was just absolutely fascinating witnessing this, correct? Which is when you see these numbers, it's totally mind-boggling. So, the question I have is Euro 4 hours. Let's go Euro 4 hours. I miss Forex a lot. Currently Martin and Philip trading Forex. So I believe in order to trade Forex, you have to live in Europe because you have to be part of European markets unless you don't like to sleep. Ouch! This is Euro. Trade multiple time frames. So here it is. This is Euro monthly. This is Euro monthly that reached the end of the minor trend. Do you see how important this level is? Euro spelled out this level, I will tell you exactly when. In 2010, Euro spelled out level. So if you're a position trader and you acquired a bullish rally in 2010, it's a good time to adjust your trail. In the next months, we're gonna see if this is spectacular collapse or not. I expect a very powerful bullish rally on Euro that will be only corrective. And when I say powerful bullish rally, because I see the bearish trend taking a major pause on weekly. The question you had was about what? 4-hour chart. Perfect. But I just want to recap multiple time frames. So take a look at these levels and please document them and let me know if you have any questions, because I never get tired of the price. So this is where Euro weekly had found the bounce. The end of the minor trend, the bounce. What is Euro showing currently? Euro showing potential blasting through this level and continuing further down. Nevertheless, respect this level highly. Do not ever acquire position anywhere into this support level. Very important to respect it. Do not. This is most powerful support level in the market structure. If you are short from 3800, 3750, multiple shorting opportunities, not into this level. Your next shorting opportunity only if wave is met is outside of decision point 1. But rules must be met. And that remains the key. So, let's go to Euro for our chart. I just wanted to highlight different time frames, as frankly, I never ever get tired of it. Euro for our chart coming up, because after we're done, I will be working on Forex, larger time frames, because the latest and the greatest is just, I can't get enough. So, Euro 240 for our chart. Okie dokie. So, It is way too late to short euro. You don't want to be short euro at these levels. Euro 4-hour chart is also sitting at the end of the minor trend, not far off from. Here it is. This is where euro found spectacular buyers. Don't be surprised if this will play out again. This is euro 4-hour chart. And if you know where this level is, and if you know to respect the rules, you have very powerful buying opportunity, but only if rules are met. So, since I already answered this question for King, please, I'd like to answer questions for other members. Other questions, ladies and gentlemen, or I keep pulling up various stocks while you're thinking what you would like me to take a look at. I will be looking at gold. I saw a question about gold. What was it? Or was it Goldman Sachs? Hold on. Was it GS or GC? Gold 15-minute. Beautiful question. Gold 15-minute coming up. How has been volatility on gold? Please let me know. Has volatility on gold had been better than oil? Low as well. Yep. Yep. Not surprised. So, take a look at this and take a look where market has collapsed from. So, extremely low volatility, ultimate test. A lot of traders who not prepared to be tested are in for big surprise. So here it is. This is gold 15 minutes. Very beautiful and very powerful rally from gold from 1253. What has happened with this rally on 15-minute chart? Started finding sellers at the most important level in the market structure, the end of wave 1. No, absolutely not, just third wave. Trade wave 1, that's the most powerful wave, inception of the trend, not just third. Two strategies, inception of the trend and continuation of the trend. If you took the inception of the trend, you took your profits of the table here. Do you see how important this level is? Essential to respect. Price revisited this level and struggled here for 45 minutes, finally blasting through. And what do you see on gold? That's a reminder. Nowhere not to acquire position. And those who say, and those who are speculative traders and say, I'm riding a powerful, powerful trend, ouch, bad idea. What has happened here? Not a prudent thing to do. Here it is. The fluff is on. You did have powerful shorting opportunity. Would you like to see why the trend is struggling? That's because reversal zone had been respected. In order for the short trend to continue, this level must be broken. And price had not been able to do that yet. Tomorrow, an extremely important day, and tonight. What will price do? Price is showing potential of finding plenty of buyers. In order for the trend to continue further down, it has to blast through this level. And you knew where this level was? Since I will tell you when in just a second. When the trend had started on June 9th at the market closed. Aussie USD, the happiest country on earth, coming up daily. I love to use 14-40-minute chart on my dailies because it gets rid of all the background noise. Alright, so Aussie daily, buckle up. The fight will be brutal and vicious. Do you know why? If you long, you better be in serious profit. The long buying opportunity were at 9200 area. So this is what played out on Euro and on Aussie, and this is where you should expect the fight to continue. The end of the minor trend, where price collapsed from first time, and this is where price almost at. So if you're a knowledgeable trader, you're trailing very carefully, because chances of the same collapse is pretty high. At least you will get very powerful bearish correction. Bottom line is price very close to ultimate resistance. The end of the minor trend is here. Trend will not continue until it would stage a pullback. The key is monitor the rules. See if you have short opportunity or if it's only a correction. So here it is. That's Aussie Daily. Any other questions? Please let me know. I'm using any charts. We have students who trade tick charts. We teach everything on range charts. It doesn't matter to me what charts I look at. No, it's completely opposite. Completely opposite. You can take a look on the performance page. In the course you learned that ratios do matter, and it is very important. Absolutely critical and essential. If you take in trade that doesn't obey the ratios, it's simply an aggressive trade structure. Based on the conservative rules, I will show you a couple of emails I'm getting from my students ongoingly, which I love. So let me see what I can show you. Since we have quite a lot of Forex traders here, I will highlight to you what Philip accomplished on Forex 15-minute chart. That's the success rate. Forex 15-minute and hourly chart. Looking, what else do I see? This is what I love to see from my students. Anyway, I can't show you everything because then loves homework and screenshots. Those who take trading seriously, here, hold on. I love Tony. He's our full-time doctor. He trades ETFs. See, this is the typical email I get from our students. Quite stunning. And that's typical. So, any other questions about any other instruments? Feel free to ask. Here's another email I received from one of the other students. Hold on. Let me show you. Because I don't want to show the email addresses, right? So let me just be careful. Very important. This is very important, what she mentions here, Lorraine. Again, I haven't looked on ETFs since probably at least 2008. So here it is. This is very critical component. Who is the most important ingredient in trading? It's you as a trader, correct? So when the trader mentions, it's just my head that needs constant work and readjustment. This is extremely powerful. Because you as a trader will forever and ever remain the most important ingredient. You are in charge of your trading. You are in charge of every single trade you place. Do you have enough patience and discipline? Can you play by the rules? and if you observe and recognize that it's you that needs work, not the strategy, is very, very important point. So guys, any other questions? Otherwise, we are done. We had been here for an hour. I will guide you through the website. I will show you where to find what. Any other questions? Feel free to ask. So, if you come to the website, very, very important part, blog. If you click on the blog column, you can see the latest posts, the latest videos, analysis. If you would like to read about Alpha Wave Trader method, you simply go to the section that states the AWT method about Alpha Wave Trader. You can learn what to expect in Alpha Wave Trading Room. I highly encourage you to review the video before you come to the room. Here's the Alpha Wave Trader video library, and you can meet fellow Alphys, Alpha Wave Trader students and graduates. And that's all there is, guys. So just to confirm, I would like to post the invite, and I look forward to seeing you tomorrow. No other questions? Awesome. My pleasure. Let's hope we're gonna get some volatility. Thank you, Adrian. Thank you so much for having me. 9:30 EST. Room is open only 3 hours. My pleasure, ladies and gentlemen. And if you have any questions, any concerns, I'm always open to speak with you. Here's my contact. I'm always open. I love fellow traders. Thank you so much. Have an amazing afternoon. Look forward to seeing you tomorrow.